to the show, everyone. I'm excited about having my first guest on, who is Anna von Straussenburg. She's the owner of L. Anna von Straussenburg CPA. Not only is she a longtime guest, she is also one of my sponsors. So thank you for being here. Thank you for supporting me. And I love having you on because if there isn't anybody that you, when you look up the word integrity, when you look up the word honesty, right? There's a picture of Anna right there. Anna, thanks you for being here, and thanks for being on again.
Well, thank you for having me, Carol. It's a delight to be on this show, and yes, that's what I'm all about. I strive to do my best. I stand by my work, and above all, I am honest almost to a fault. I always fear. I see these movies, and I think if somebody had a gun to my head and I had to lie, I might be able to lie then, but I don't know if I do a good job at it. I hope that never happens to me, because like somebody said, I can't lie to save my life. And so when somebody asks me to do something dishonest, I am just happy to show them the door.
Right.
So right. I just won't do that. So.
Well, and the other thing is you stand by your work 100%. You guarantee your work.
Yes, I do. If we find out we made a mistake, I will, if it takes amending the return, I will amend it for free. If there's a penalty involved, I will pay the penalty. And so we really try our best to do the best job possible.
Absolutely, absolutely.
And somebody said, oh, well, it's taking so long, because we asked the clients for some more information and they were frustrated that we needed to know their loan balance or whatever. And I said, you know what, I'm just not going to just put numbers on the return. I'm going to do it right. Because I said it not only protects you in the case of an audit, but I'm a CPA, so I'm bound by my profession to produce the best tax return possible. And also the IRS, there's the rules that I have to provide an accurate tax return to the best of my knowledge. Mm-hmm. So if I know something's wrong, I'm going to fix it.
Right, absolutely. Yeah. Now, you do both business and personal taxes, right?
Yes.
And when we have the word, CPA right after your business, a lot of people think you have to have a large business and you don't. And I want you to explain a little bit about how you can work with any size business.
Yeah, I've worked with large businesses in the past, that net $1 million a year. And I've also worked with small startup businesses. And I've even had the pleasure of watching one of my businesses going from negative net income to netting $1 million over a year. And he over the years, he grew his business, and I think I played a small part in that, or maybe a big part, but we straightened out his inventory, which was a big problem for him. And he could finally see his numbers accurately and knew what to do to grow it. And one of them involved, when he found out his cost of goods sold were a bit high, he changed manufacturers because we got him some good numbers. And so he sold it for about $12 million because he wanted to retire.
There's nothing wrong with that. Yeah. I could have one of those million.
Yeah. Yeah. Anyway, so that's what I try to do. And, and now I'm kind of like, if somebody needs a bookkeeper, I've got a referral source for that. So.
But you also happen to love doing complicated returns.
I do. I've had clients in multi-states. I've had clients that have multiple businesses, and I've had clients that had, what they call employee stock options or incentive stock options, and there's a lot of different flavors of that, but it's a tricky thing to handle. A lot of people think they can do it on their own, and they don't. They don't do it correctly.
I don't care if you're that type of a business or not. I don't think anybody should be doing their taxes on their own. I really don't. And we've seen that happen over and over and over again. And I'll just say the story, I have to say it. Because my daughter is a perfect example of somebody that said even this last year, oh, I'm just going to do it on my own. Even though you had done it, and then I said, well, I know that you want to do it on your own, but you may want to just have Anna take a look at it again, just one more time. And guess what? She was thrilled that you did it.
Yeah, she ended
And she
up,
will never try
Yeah.
and do it on her own again.
Yeah, she ended up owing a lot less, and then I think even from the state may have gotten a small refund, so,
Mhm, yeah.
yeah, it kind of netted
So
out
it
for
makes
her.
sense, and sometimes it just makes sense. The phone number to call Anna is 480-964-4030. That's 480-964-4030. She does free consultations. You work nationwide. You're rated with the Better Business Bureau, and her website is ArizonaCPAs.com. And you know, right now is a great time. A lot of people, even they get extensions.
Mhm.
It's the summertime, it's hot, you're at home. What do you want to do? Get your taxes taken care of.
Yeah, get them out of the way while it's too hot to do anything outside.
Right, exactly.
Yeah.
Now, it's one thing that you wanted to talk about, a little story today, about a pizza delivery.
Well, yeah, this came to my mind this morning. I saw a post, because I live out in the boonies, and somebody said, well, we're now going to get pizza delivery to our neighborhood, because getting delivery out there is tricky, and it's, some of the services charge quite a bit, sometimes in the form of hidden prices on the menu and stuff like that. But what they do is they're going to charge an extra $5, and I thought, and people are like, oh, why do they have to do that? And I thought, you know what, that's a bargain, because the standard mileage rate, because of the gas prices being so high, is 65 cents a mile now. So it's roughly 10 miles to my house, and so for that 10 miles, that would mean the round trip costs $13 for the
Wow.
employer. And I'm saying for the employer because I would, unless he's an independent contractor, he's an employee, and therefore he cannot deduct the mileage on his own tax return.
Oh.
There's no ability for an employee, so the only way the employee can recoup the cost is if the employer reimburses him for his mileage.
Which would be nice, but I'm sorry, I don't think the pizza guy's gonna do that.
Probably not. And the
Well, it's okay. But you know what I wanna say?
I was thinking, the minimum wage, there, I got it out of my mind.
There's a-
Minimum wage is over $14, so that's expensive.
Well, this is something that I wanna ask you, just came to my mind, and so I don't know if it's gonna be applicable or not, but, the one reason why to have your own business is because these write-offs these are what we talk about, are what you can have when
Yeah.
you do own your own business.
Yeah, if you own your own business and you're a sole proprietor, you can absolutely deduct those expenses at that mileage rate, or you can deduct actual expenses. And, but the main thing is people have to track their mileage. They have to keep a log of when they drive and where they drive. And it's not they're from their house to their work, it's from their work to other customers.
So I'll tell you something, folks. This is something that when you talk with Anna and you have that consultation with her, one thing she loves to do is teach people to understand their numbers, to understand all of the tricks of things that you need to do, but to make sure, because if you ever get audited, it's gonna come back to bite you, right?
Yep.
So you wanna make sure that you have somebody that's doing your taxes that's all about excellence and integrity in accounting, and that who's Anna. The number to call her direct, it's 480-964-4030. That's 480-964-4030. It's ArizonaCPAs.com. Hang tight, we're gonna be back in just a minute.
Oh, when we come back, I wanna say one more thing about it. We can talk about it now.
That's fine, what it
Is,
is.
well, employers should, when they are reimbursing, they really do need an accountable plan. So the employees really do need to tell their employers how much they've driven,
What did you call it? An accountable?
Accountable plan. Because, in some places they may say, hey, I'll just give you a certain amount extra on your paycheck. Well, that's all well and good, but then the problem is that becomes taxable to the employee, and they have no way of writing off the mileage against it.
Well, I've never heard of an accountable plan. Do you help people who wouldn't know what to do with that? What do? They just have to make sure that they write it.
They just have it in writing, you know,
Okay.
that the employee
I
should submit their expenses and they will be reimbursed for it, so.
Okay,
Because, you know, it used to be back in the day, if employees had expenses, they could, there was a new tax law change in 2018, and before that, there was what they call the miscellaneous deductions for
right.
people who itemize, and they
Mhm.
could take expenses then, so.
Well, I mean, it used to be different. It used to
Yeah.
be a lot easier to get away with stuff, but I think
Yeah.
now, what about people who there's a lot of people that have side jobs too.
Well, if they have a side job, depending on how they're paid, if they're paid as an independent contractor, which means they get a 1099, then they would report that as a Schedule C, like a sole proprietorship.
Oh, okay, okay.
But if they're just working 2 jobs as an employee, there really is nothing.
Are
they
those
can do.
multi-level marketing type of businesses something that they also have to report?
Yes, those are reportable.
So they have to
Yeah,
get.
and we would report them on a Schedule C, and I do have one client that is in a multi-level marketing, and he actually has made some net profit over the years, a little bit, not huge, but
That's something.
yeah, hey, I think one year he
It's a
made
business.
$8,000, so.
Wow, that's not bad.
Yeah, you know, he's put that money to good use, now he's into rental properties.
Good for him. Before we leave, I want to remind me about a possibility of doing a Networking Arizona cruise.
Ooh.
And it's going to be on, I can't remember the name of the ship, but it's a buy one, get one free. So people can do this where we split whatever the cost is in half.
Wow.
So I'm going to tell you about it.
Oh, wow.
So welcome back, everyone. We're talking with Anna von Straussenburg, owner of L. Anna von Straussenburg, CPA. And before we went on a break, we were talking about pizza delivery and people, how they have to make sure that they do write down all of their mileage, right?
Mm-hmm.
But you wanted to talk about something else about that. Go ahead.
Well, for employers that do reimburse their employees, it's important that they have, for the employee's sake, that they have what they call an accountable plan, which means that the employee has to tell them maybe how many miles they drove or what they, spent on lunch for a client or whatever it is, and the employee has to turn in receipts if applicable, if it's for buying office supplies or whatever. And then that way, they get reimbursed, but it's not taxable to them. If you just say, oh, I'll just give him an extra $50 a month, well, guess what? That's gonna be taxable to them.
Go ahead. You
So-
can't you gotta make sure that
So,
you're doing
yeah,
it right.
Do it right, And that's one of the things, what is important is to get in touch with somebody like me, because I know those rules. And then there's also other rules, like if you're an owner in an S corp, well, you're supposed to be treating yourself as an employee, so that's the same deal. If you have an S corporation, you need to have a plan that you reimburse yourself out of the S corporation rather than trying to deduct it yourself, because you can't. Now, partners have a little bit more leeway, but I still advise them it's better to pay it out of the partnership and have the records there.
Now the phone number again to call her, it's 480-964-4030. That's 480-964-4030. She's all about excellence and integrity in accounting. And let me tell you something, when you're if you're just starting a business, it's a perfect person for her to call and help you on the road to success.
Mm-hmm.
Before you start going, because a lot of times what happens, especially when a business starts up, you start getting busy, and the next thing you know, you turn around, it's 10 years later. and you look back and you go, oh my gosh, right?
Yeah.
And you haven't done a lot of things. There's a lot of businesses that have not done things appropriately after years of being in business because they didn't know, number one, right?
Yeah.
And they just never went back. But you know what? It's great to start off on the right foot.
Yeah, and you don't want to wait too long, because I had a client that waited 2 years to get us involved, and we had a bit of a mess to clean up, and, that cost them a lot of money, because, I had to go in and redo a lot of stuff that
Yeah.
they did wrong, and so I didn't have that opportunity to teach them from the beginning.
And that's what you're
Yeah,
all
and
about
some
teaching.
people, they're good at what they do, the plumber or the esthetician or whoever it is, they're good at what they do, but they're not really good at accounting. And so in that case, refer them out to a bookkeeper. So, and now I've gotten a really good source, so.
Now, I also want to talk about teaching. We're going to flip this a little bit, and we're going to talk a little bit about exclusions on primary residence versus rental property.
Okay, well, back in 1998, they changed some of the rules regarding your personal residence. It used to be that when people sold a house, that they had to kind of upgrade the house to not pay the extra tax on it. They could just roll it forward. Well, in 1998, they changed the law so that if you lived in the house 2 of the last 5 years, you could exclude $250,000 for an individual, and married filing joint can exclude $500,000. And so there was this fun little loophole in there, because people who own rental properties thought, well, before I sell my rental property, I'll move into my rental property for 2 years, and therefore I can claim the exclusion. Well, a few years ago, the IRS got wise to that, and they kind of did away with
brutal.
that. What they did is, after, I believe it's 2005, after that point, if you moved into your rental property, you had to prorate your living time living in there between your rental property. So if you had the rental property like 3/4 of the time and you were only in there 1/4 of the time, then your exclusion was reduced. So
you got to be really careful, but you want to make sure that if you're working with somebody, that they're there. What I love about Anna is when we talked about teaching, you were a teacher, so you love to have your clients understand their numbers, and that's how they can grow their business better, right? And to understand, you teach them, they'll all go on to QuickBooks, if I'm correct.
Yeah, most people go on to QuickBooks, so yeah, and that's why I like to teach them on, because that's the most prevalent out there, and there's a lot of information on QuickBooks. So.
What else did you want to say?
Well, I also wanted to talk a little bit about rental properties, because a lot of people do that. They have a rental property, and you must depreciate that rental property, because if you don't, you're still going to have to recapture the depreciation that you would have paid taken over the years. So your best bet is to take it, because if you make too much money, you can't deduct all your losses, but when you sell it, you can deduct the losses. So I had a client that came in and talked about, well, what if I sell my rental properties? And I said, well, because you depreciated, we have to add that to the gain, but then that gain is taxed at a maximum of, the portion that's the depreciation is taxed at a maximum of 25%. And then, but the rest of it is taxed at the capital gains rate. So depending on your income, it could be 0, it could be 10, it could be 20. And so, there is an advantage to knowing what the law is, because you don't want to get hurt on the back end of it.
And that is something that you are an incredible researcher, and you make sure that you know all of the laws, because you're on top of it. You get all sorts of information from the IRS on a daily basis, right? But you're on top of that, and that is what makes somebody like you so good.
Yeah, and it's funny, I was talking to my client, he kind of looks at me, he says, well, that's not really fair, and that doesn't make sense. And I said, well, one of my phrases I love to say is that tax law is not necessarily fair nor logical, because it's, whoever's in Congress is making the laws, And then the IRS has to do their best to comply with that law in the tax code, and so it doesn't always make sense, and sometimes there's things that fall through the cracks that are gotchas. Some of them, are helpful, like the little loophole for rental people that they finally closed, but there's other things that, where people get penalized where they probably shouldn't have been.
Right.
Back when they had some of the, actually it still occurs, the American, I'll call it Obamacare for lack of a better word, the health care, sometimes people get penalized in very weird situations where it doesn't make sense.
Wow, that's on the, recently?
Yeah, well, a couple of years ago, I had a client that he had income, but he had a business loss from somebody defaulted on a loan. And the logic, so he was penalized because he did not make enough money, but he had the health care through the marketplace. And the logic is because he was low income, he was supposed to get state help assistance. But you know what? He wouldn't have qualified because his overall income was too high. And that was basically a paper loss because that money had been lost years before.
Now, if he would have discussed that with you beforehand, you could have caught that to help him, or what could have happened?
I don't think there was much we could do at that point because that loss had occurred years prior, and they finally just declared it a bad loss.
But let's say something like that, you could
Sometimes
make
I can, yeah.
Yeah.
That particular case, there wasn't much I could do.
Well, what would be, for the people that are listening right now, that's the summertime, they're stuck in their homes, they're hankering down, what would be your advice for them for getting ready to get tax season? Because tax season is every day as far as I'm concerned.
Yeah, well, a lot of people have, as you pointed out, are on extensions, so they should gather their documents, and if they don't have a CPA, they might want to consider calling one like me, and otherwise they should gather all their documents in a nice neat order and have them all ready. And what I mean by documents, well, if they have interest, they need to have their 1099s. If they have broker statements, gather the year-end 1099 reporting from the broker, your W-2s, any charitable donations, medical expenses. You want to gather all the information so that whoever prepares your taxes can look at it and take the best route.
That's why I want to call Anna now. Her phone number is 480-964-4030. That's 480-964-4030. She's all about excellence and integrity in accounting. And let me tell you something, folks. She will let you know your numbers. She can let you understand your numbers and help you grow your business. She does do personal and business taxes. Again, that phone number is 480-964-4030. She does free consultations. She's rated with the Better Business Bureau. Check her out on her website. It's ArizonaCPAs with an S.com.